Hello, hi, this is Alexander Nikolov. Let's take a look at the Forex markets in today's video. This is the chart of Euro USD, the daily chart, and you can see that the pattern of lower lows and lower highs has established here um, on the daily chart, and that is something that we haven't expected before. We expected a pullback from the early November top, but close to a pullback close to the 100-day moving average, which is the blue line. Now the prices are firmly below the 100-day moving average, and that means that a larger decline than previously expected may be underway here. The key level of support right now is right at 132 level, and then we can expect weakness toward 129, 20 level here. So the daily chart is neutral to negative right now, and if we go to the larger degree time frame, the weekly chart, you can see that the rise from the May low has remained in three waves, which means it is a correction, and it could still morph into a more larger pattern on the upside. But right now, with the fast decline from the early November top, the odds favor further weakness here and probably a full retest on this year's low. So the weekly chart is turning negative too. Notice the sell signal here from the daily stochastics. Until proven otherwise, the odds favor further decline on medium-term time frame and also on the daily chart, which is a short-term time frame. Going to the hourly chart, you can see here that the trend is clearly on the downside. The pair has found some support near the 132 level, but now there is strong resistance here, as you can see, at 132.86 level, and then there is resistance and one just right around 134 level. So overall, the trend is down on all three time frames here, and until proven otherwise, we'll expect lower prices in this market in the next week and next several weeks. Going to the British Pound USD chart, as you know, we've been following wave C ending diagonal triangle here. To recap from the weekly chart, we have ABC move from the early 2009 low. So we have an ABC pattern, and wave C, it seems it has developed into an ending diagonal pattern, and now this ending diagonal pattern is likely complete. We still cannot confirm this view. We need a move below this low here around 153 level, 152.60 level. So still we can't confirm completely that the ending diagonal triangle is complete, but the odds now with the fast decline last week, the odds favor that this pattern is complete. What are the implications of this pattern? Very negative. We expect a sharp move lower in the next several months toward 145, 140 area. And if we go back to the weekly chart, we expect weakness, much further weakness toward 134 and actually even below that level in the coming months. So if this outlook is correct, then we should see lower prices ahead. The point here is that on the weekly chart, the reason that why we think that this pattern here from the May 2010 low is complete, the reason that we think it is complete is that despite not only the price pattern confirms that, but also notice the sell signals from weekly RSI and weekly stochastics indicators. So let's jump now to the yen to the US dollar Japanese yen market. On the weekly chart, you know, the trend remains lower, and what we've been looking for here, we were looking here for actually a series of ups and downs, ups and downs here to end this move from May stop of this year, and but the larger pattern still remains on the downside. We have now a small buy signal from the weekly stochastics and weekly RSI indicators, which signals may mean something here, but it's really too early to say that with confidence. The trend remains lower, and as before, we need to see a sharp move, but first probably we'll see further sideways consolidation, and then a sharp move above the 95 level to confirm a trend change on the weekly time frame. On the daily time frame, the pattern is more constructive right now, but notice that we still have the series of lower lows and lower highs here, and the market is now overbought. So under this trend definition, which, as you know, we label this trend as a weak downtrend, when the prices are near the 100-day moving average and the daily stochastics is overbought, we consider usually a short position. So um, this is exactly what we expect to see now. Even if the pair has bottomed out already, we would expect the current up move to run out of steam soon, and another retest of this year's low to be seen in the next few weeks. So overall, we remain bearish here. And let's just quickly take a look at some other markets that we don't follow regularly in our updates. This is the New Zealand dollar against the US dollar. And as you can see here, the pattern has become more bearish here. The previous breakout level here on the daily chart still holds. It's still intact, but again, the speed of the current decline is very strong. And if you take a look at the Australian dollar, the Aussie against the US dollar, again, you will notice that while the previous breakout levels near 93.50 is still holding, the pair is just breaking down from this topping formation here. So unless it reverses strongly on the upside in the next day or two, the odds will favor further weakness. So dollar seems to be strong. The US dollar seems to be strong against almost all major currencies. So we remain, bottom line is that for the time being, we remain bullish for the US dollar. Thanks for listening, and I'll be talking to you again later.